Welcome to today's video on why real estate is the best passive income strategy in 2026. If you've ever wondered how to build lasting wealth without having to work 24/7, then real estate might be the solution you're looking for. It's one of the most reliable and profitable ways to earn money passively, and in this video, I'll explain exactly why real estate continues to be the top choice for investors looking to generate income with minimal effort. Don't forget to help us out with a like and subscribe to our channel for more of the best passive income content. First off, let's define what passive income is. Passive income is income that requires little to no active effort to maintain. This means you do the work up front, and then your money keeps coming in while you sleep, travel, or focus on other ventures. With real estate, this is not just a possibility, it's a reality. Many investors have been earning money through real estate for decades, and it's easy to see why. Properties appreciate over time, rental income provides steady cash flow, and the tax benefits can be significant. The security of real estate. One of the most appealing factors of real estate as a passive income strategy is its stability. Unlike the stock market or other more volatile investments, real estate is a tangible asset. It's not something that can be wiped out overnight or drastically fluctuate in value on a whim. While it's true that the real estate market can experience downturns, over time, property values generally rise, making it a relatively safe investment. This security comes from the basic principle of supply and demand. As populations grow and urbanize, the need for housing increases, which drives up property values. Even in times of economic uncertainty, people still need somewhere to live, which keeps the demand for rental properties high. If you hold onto your properties long enough, you will likely see their value increase, sometimes dramatically, providing you with both short-term rental income and long-term capital gains. Reliable cash flow with rental properties. The second major reason why real estate is such a great passive income strategy is rental income. When you own rental property, whether it's residential or commercial, you can generate a steady stream of income by renting it out. This cash flow can be used to cover the property's mortgage, taxes, and maintenance costs, and the leftover profits are yours to keep. Rental income can be incredibly reliable, especially if you purchase properties in high-demand areas. Tenants pay their rent monthly, and as long as you choose your properties wisely and maintain them well, you can expect a regular cash flow. One of the best things about rental properties is that, over time, the rent you charge can increase to match inflation and market rates, ensuring that your income continues to grow. Leverage in financing real estate also gives you the unique opportunity to use leverage to increase your returns. With real estate, you don't need to pay for the entire property up front. Instead, you can use a mortgage to finance your purchase. This allows you to control a larger asset with a smaller upfront investment. Let's say you purchase a property for $200,000 and you put down a 20% deposit, which is $40,000. With a mortgage, you now own a $200,000 asset, and while you're only responsible for the $40,000 out of pocket, the property is working for you to generate income. As the property appreciates in value and your mortgage gets paid down, you gain equity in the property. This means that, over time, your return on investment increases, and you can use that equity to leverage future investments. In fact, leveraging your real estate investments is one of the quickest ways to build wealth. By using your properties as collateral, you can take out loans for additional properties and expand your portfolio. This snowball effect is one of the reasons real estate has been so successful for investors for centuries. Appreciation and long-term gains. Another key advantage of real estate is appreciation. Over time, real estate generally increases in value. This is due to various factors, including improvements in the local economy, demand for housing, and renovations or upgrades to the property itself. Even if you don't make any physical improvements, your property's value may still rise due to external factors. For example, a neighborhood that sees improvements in infrastructure, such as better schools, transportation links, or public amenities, will naturally become more desirable. This results in rising property values, which means your property is worth more than it was when you bought it. If you decide to sell, this appreciation can lead to significant profits. This is why real estate is often considered a long-term investment. If you're patient and make the right investments, your properties will likely increase in value over time, creating significant returns. Unlike stocks, where you might need to monitor your investments daily, real estate allows you to sit back, watch the value grow, and eventually cash out when the time is right. Tax benefits of real estate. One of the most significant advantages of investing in real estate is the tax benefits. Real estate offers several deductions that can help lower your taxable income, making it a great way to build wealth while minimizing your tax burden. For instance, mortgage interest, property taxes, and even property management fees can often be deducted from your taxable income. Additionally, you can take advantage of depreciation. Depreciation is a tax deduction that allows you to deduct a portion of your property's value each year, which can offset your rental income. This is a huge advantage because it allows you to lower your tax liability and increase your cash flow. For real estate investors, these tax breaks can make a big difference in how much money you take home. When you consider that real estate allows you to earn passive income while also taking advantage of tax deductions, it becomes clear why so many people turn to real estate as their primary source of passive income. Diversification and protection against inflation. Real estate is also an excellent tool for diversification. Diversifying your investments is important because it helps reduce risk. By adding real estate to your portfolio, you can balance out the more volatile nature of stocks and bonds. Real estate tends to be less affected by market fluctuations, so it provides a stable and consistent income stream even when other investments are performing poorly. Additionally, real estate is a great hedge against inflation. As inflation rises, the cost of goods and services increases, including rent. Landlords can adjust their rents to keep up with inflation, ensuring that their rental income grows over time. Meanwhile, the value of your property also tends to rise with inflation, further protecting your investment from losing value. This ability to hedge against inflation is why real estate is often seen as a reliable investment during uncertain economic times. Whether you're concerned about inflation, a downturn in the stock market, or just want to protect your assets, real estate provides a level of security that other types of investments can't match. The flexibility of real estate investing. Another reason real estate is the best passive income strategy is the flexibility it offers. Real estate investments come in many forms, from long-term rental properties to vacation rentals, fix and flip properties, or even real estate investment trusts, REITs. You can choose the type of investment that best suits your goals, budget, and timeline. For example, if you don't want to deal with the hassle of being a landlord, you can opt for a REIT, which allows you to invest in real estate without owning physical properties. REITs pay out dividends to investors based on the income generated by the properties they own, making them a great way to earn passive income from real estate without much effort. Alternatively, you can buy and hold rental properties for long-term cash flow, or you can flip houses for a quicker profit. Each strategy has its benefits and can be tailored to your specific financial situation and goals. In conclusion, real estate is by far one of the best passive income strategies in 2026 and beyond. Whether you're looking to earn consistent rental income, benefit from property appreciation, or take advantage of tax breaks, real estate offers a solid long-term strategy for building wealth. It provides security, stability, and flexibility, all while generating passive income.